this sort of sideways session today. The VIX is up a little bit, but it's just over 13. And we now have this sort of drift after the big recent rally. Does it look to you like that drift continues?
Hi, Julie. Great to be with you. You know, I think something that we're not looking at is, yes, the Dow made an all-time new high today, but if you take a look at the NASDAQ, which is really getting clobbered, and if you take a look at the Russell, 2 out of the last 3 days, that's really been getting hurt. So things are pointing that maybe a little bit of risk is coming off the table, but until the VIX does play along with it and start to go a little higher, it's still probably a drift. But I think we're seeing some warning signs saying that, hey, we might want to take some profit here because, as I said, NASDAQ down 55 points in the futures and the Russell down over like 10 points. So it's a pretty big move for both those indexes, looking like they want to go a little bit lower.
So those are the warning signs for you. Are there any others, do you think? Do you think the jobs report on Friday could be a negative catalyst?
Well, I think the jobs, we're now, I think, past that jobs because that was usually based on what the Fed was going to do, but the Fed is going to be forced to raise because if you look at the Treasury bonds, we've now taken the 10-year note from 1.3 to 2.5. We've taken the 30 back over, well over 3%, and the bond futures continue to get clobbered every day. So what we're seeing here is that interest rates are going to have to rise, which now the Fed is going to be forced to raise into this because that's all they can do right now. So they're going to have to raise rates. So the jobs number is really pretty meaningless right now. Because we know the jobs are not very good no matter what they are. Interesting
perspective. I like that, Todd. Let's talk about your trade of the day, which has to do with OPEC. And it sounds like you share, frankly, what is some of my skepticism here. We showed an earlier chart showing how consistently OPEC pumps above its targets. So you're looking at the XLE here as a proxy. It's the ETF that tracks the energy industry. And talk me through your trade here because it has a couple of different legs.
Yes, I will. I think that, of course, I do agree with you that OPEC is a little bit fishy, but I think XLE is a great trade for a couple of weeks here because if we're right, we can make a lot of money in a short period of time. But we're going to go out to December, and we're going to buy the XLE December 16th, which is 2 weeks from Friday. We're going to buy the 74 put. But what we're going to do to try to finance trade a little bit is we're going to sell the put that expires this Friday, the 73. So we're putting what we call a diagonal spread on for a total risk of like $86 right now. And if the trade goes completely against us, we can lose $86. However, after Friday's expiration, if we stay above 73, then we can own the short oil for free, and then we can take a run for 2 weeks to see if we can see that you and I are both right, that OPEC is going to go ahead and overpump, and this is really just a short covering rally into oil versus an actual real rally.
And we've actually seen the XLE, we showed a chart earlier in the day, that it's actually outperformed oil if you go back over the past couple of years. So what do you think the path is forward, sort of the relationship between the XLE and oil prices?
I think that it will come back to perform more with oil because I think what you're seeing here now is we had so much wides trading in oil and people were trying to use that proxy. I think now that we're going to actually see oil, I believe, is going to stay in this range and actually go down and test the $40 level before it's all over. I think this actually will come back down into it because a couple of months ago it was backtracking again, and then when we get away from it, there's a lot of money that won't go out to the futures market and trade but will run into these other products like the XLE. So I think you're seeing some money running in here trying to buy oil as a proxy through the XLE.